The cryptocurrency exchange Coinbase has joined the lawsuit against the US Treasury for sanctioning Tornado Cash, a privacy protocol that does not require human intervention to operate. The company is paying the plaintiffs legal fees and costs, and has pledged to back the lawsuit. The suit has already drawn the ire of the crypto community, which has accused Coinbase of using the US sanctions as a weapon to silence dissent. The lawsuit claims that the Treasury overstepped its authority in sanctioning the Tornado Cash software and tradable currency. It also claims that the sanctions stifle free speech. The company identified the plaintiffs by conducting a survey of its own workforce to determine whether the sanctions had affected their own workers. Coinbase's CEO Brian Armstrong has written a blog post about the lawsuit. In it, he argues that the Treasury acted beyond its authority and caused a lot of damage. In addition, he says that this action hurt the cryptocurrency's users. Therefore, he wants the court to take the Tornado Cash smart contracts off the US Treasury's sanctions list. A new lawsuit filed in a U.S. district court in Waco, Texas, claims that the Treasury Department imposed sanctions on Tornado Cash in August. The Treasury's Office of Foreign Assets Control, OFAC, said that Tornado Cash had been used to launder nearly $7 billion in digital currency by North Korean hackers. The largest U.S. crypto exchange by trading volume is Coinbase, founded in 2013 by two technology entrepreneurs. The platform has since developed a brokerage business, attracting corporate clients including Tesla and hedge fund Third Point Management. The company is now expanding into other markets and is planning to launch an NFT marketplace, along with derivative services. Its major disadvantages include high fees and poor customer service. Crypto exchange volumes are highly influenced by the price volatility of cryptocurrencies, with Bitcoin being the biggest factor in most cases. The fourth quarter of last year saw Coinbase's total trading volume nearly double, to $89 billion, up from $46 billion in the previous 3 months. As Bitcoin's price has risen, Coinbase is rapidly expanding its list of supported coins. The company believes that diversification is the key to a stable environment. Despite Coinbase's popularity, many other cryptocurrency exchanges exist. Gemini, founded by the Winklevoss twins, Bitstamp, and Kraken are other notable names. In Asia, Binance, launched 4 years ago, offers a variety of cryptocurrencies. In March, Binance generated $757 billion in trade volume, more than double that of Coinbase. Coinbase has also stepped up efforts to get institutional clients onto its platform. In late October, it received approval from the New York State Department of Financial Services to open an over-the-counter trading desk for Coinbase Prime customers. This allows institutional investors to trade in cryptocurrencies without paying a 0.1% transaction fee. Tornado Cash, a popular cryptocurrency mixing service, has been linked to numerous money laundering and cybercrime activities. The company is accused of helping criminals hide and launder the proceeds of hacking operations. Dutch authorities arrested a 29-year-old man on August 10 for alleged involvement in facilitating and concealing criminal financial flows. Tornado Cash allows for private transactions on the Ethereum network and has been used to launder over $7 billion in virtual currency. The company has also been used to launder $445 million stolen from the Lazarus Group, a notorious North Korean hacking group. The group is currently under US sanctions, and is linked to a string of high-profile hacking operations. It is believed that Lazarus Group is behind the theft of at least $625 million from the Ronin network, and $100 million from Harmony's Horizon Bridge. North Korea has been using cryptocurrency theft operations to fund its nuclear and ballistic missile programs. The US Treasury Department recently sanctioned Tornado Cash, a popular cryptocurrency mixer. This sanction prohibits the company from interacting with US citizens and requires it to report its assets. But critics say the government should have targeted users' wallet addresses and smart contracts that allow the cryptocurrency exchange to operate. A recent analysis by TRM Labs shows that more than 41% of Tornado Cash deposits are tied to hacking operations, and shows that North Korean threat actors account for over $1 billion of Tornado Cash funds. The company has also been used in smaller heists such as the Ronin Bridge hack. It was also used to launder proceeds from the Nomad heist, which involved the theft of more than $1.4 million worth of ETH. The OFAC sanctions smart contract addresses for the following reasons: they may be linked to foreign governments, or they may support terrorist organizations or narcotics traffickers. Either way, they may disrupt the financial system, and may cause liquidations and abandonment of funds. Smart contract addresses are not directly connected to the sanctioned persons or organizations, so OFAC may not be able to monitor transactions between the two. In addition to these problems, OFAC sanctions also raise constitutional questions. While they may be constitutional when applied after the fact, prior restraints on speech are almost always unconstitutional. Furthermore, OFAC sanctions operate on a strict liability regime, which means that no prosecutor must prove a fact to add a person's name to the list. Hence, any transaction with anyone on the OFAC sanctions list is banned, regardless of the specific transaction details or motivations of the transacting party. Despite this, OFAC sanctions have not been challenged on First Amendment or due process grounds. Tornado Cash is one of the first smart contract addresses to be sanctioned by OFAC. This is because it contains a non-person, and can be distributed through a wide range of means. This has led to confusion amongst the Ethereum community. Moreover, the Tornado Cash smart contract is also linked to the US government, which has a long history of sanctioning cryptocurrency projects. Since the launch of Tornado Cash, it has been used to launder more than $7 billion in digital assets, including the stolen property of the Lazarus Group. As a result, the United States Treasury Department imposed sanctions against the company in early August. According to a former FBI intelligence analyst, the North Korean crypto hacking problem is only going to get worse. Tornado Cash utilizes smart contracts to allow deposits and withdrawals from different addresses. This helps break the on-chain link between deposited and withdrawn funds. Furthermore, it supports fixed amount pools of 6 tokens. In addition, the Tornado Cash platform is easy to use and can be used by anyone in the world. While there are several legitimate reasons for using Tornado Cash, there are a few precautions that should be followed to ensure your privacy. First, you should make sure you're using a VPN with a no-log policy. It's also a good idea to delete all your browser data after every transaction. Moreover, you should install your Tornado Cash wallet application every time you make a deposit or withdrawal. In addition, keep in mind that the Tornado Cash wallet application exposes you to the risks of smart contracts. The Tornado Cash is a well-designed and carefully thought-out product. In addition, it's also fully decentralized. Its governance is handled by a decentralized organization called the DAO. The Torn token is created to be used for transactions, and users can interact with it via an interplanetary file system, IPFS. Because of this, the Tornado Cash ecosystem will continue to grow and become the most diversified and robust blockchain solution. Coinbase has backed the lawsuit by pledging to pay the legal costs involved. The case focuses on the Tornado Cash cryptocurrency, which has become a favorite for North Korean hackers and others to use as a means of laundering the proceeds of crime. However, critics argue that the government should have targeted smart contracts and wallet addresses rather than the cryptocurrency itself. The lawsuit claims that the U.S. Treasury's decision to ban Tornado Cash has undermined the First Amendment's right to free speech. The cryptocurrency's developers based outside of the U.S. would not be affected by the ban. The lawsuit was also backed by several Coinbase employees, including ex-Amazon engineer Joseph Van Loon and new space angel investor Alex Fisher. Coinbase is backing a lawsuit against the Treasury Department because the agency blacklisted Tornado Cash in August. The company says that Treasury overstepped its authority and ignored legitimate use cases of Tornado Cash. The suit also claims that the agency has violated the user's constitutional rights. Coinbase is backing the lawsuit, which was filed in a Texas federal court by 6 Tornado Cash users. The lawsuit names Treasury Secretary Janet Yellen and OFAC Director Andrea Gacki as defendants. The suit alleges that the government's actions have impeded innovation in the crypto space,